Welcome back. This is Jacob Milligan with 9M Investments. And today we're going to be talking about tax smart giving in 2024. With tax day right around the corner, I thought I'd share some strategies to help for this year, help save us taxes for next year. So some of the key considerations for charitable giving in 24 is the charitable deduction limits, the standard deduction, appreciated non-cash assets, and qualified charitable distributions. So when it comes to charitable deduction limits, you have annual, for those itemizing deductions, you can give up to public charities up to 30% of your adjusted gross income for non-cash assets held over a year, and up to 60% in cash donations. One of the great things with this is you can also exceed these limits of excess for up to 5 years within AIG constraints. The standard deductions, if you're going to be itemizing, you must surpass the standard deductions. So for an individual, that's 14,600. For joint filers, that's 29,200 in 2024. Appreciated non-cash assets, donating long-held assets is a great way to sidestep capital gain taxes and potentially enhance the charitable amount to a fair market value deduction. Again, if you're itemizing. Qualified charitable distribution is another great one for people over 70 and a half. You can direct up to 105,000 tax-free to charities directly from your IRA, not only satisfying your required minimum distribution, but also without impacting your taxable income. So let's walk through a few different scenarios and kind of see how this would work in action. So scenario one, capitalizing on appreciated stocks. Client concern, this stock price has surged. How should I handle it tax wise? We've seen those markets surge from November to today. Let's say you wanted to sell some of that in a taxable account. Well, you're going to have some capital gains to deal with. By donating these appreciated stocks directly to a charity or a donor advised fund, you can avoid those capital gains. Then possibly also amplify the donation and the charitable part of it as well. This navigating the standard deduction versus itemized deductions. Again, you want to make sure that you're staying. If you're going to be itemizing and you want to do a charitable deduction, you make sure that you go over the standard deduction. But you can also kind of bundle these donations to make sure that you exceed the deduction every other year. So that can kind of help from a planning standpoint. One of my favorites is leveraging the IRA for charitable deductions. When it comes to a client that doesn't necessarily need all the income from that RMD, one of the great ways to do that is do a qualified charitable deduction. Allows you to give directly to the charity, directly from the IRA, and that'll satisfy not only your required minimum distribution, but it won't affect your taxes either. So it's a great way to kind of do good and also save some taxes there. Converting from an IRA to a Roth IRA, it's one of the first questions I get with all my planning clients, but there's a tax hit coming up front. And one of the ways to kind of offset that tax hit is, again, doing a charitable donation, and again, some upfront planning to make sure that is kind of from a tax standpoint, a wash. And then if you have a business that you're selling, one of the ways that you can help avoid some of the capital gains acquire or that comes with selling that business is donating a portion to a charity. So again, another way to lower taxes possibly, and then also do good and give to the charities of your choice. So those are some of the main ones that are available. Whether that is a fit for you or your situation any given tax year. One of the great things is, from year to year, you can plan these out and make sure that you're kind of doing the best of both worlds. Giving to the charity of your choice, then also help you reduce taxes along the way. So I hope this was helpful. If you have any questions, please reach out. I'd be more than happy to walk through your situation. Have a great day.